One more second. Be right there. Dive into the deep, fixing the world while the rest of us sleep. Your heart said I'm giving, no matter the strain, building your legacy through blood and rain. I think that's it. All right, so here we go. Here we go. I think we are ready to go. I think so. Live, 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 live. Well, that was interesting. Thank you. Dr. Jason, how are you doing today? Good evening, everyone. My name is James. This is Dividend Stock Talk brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week. Now, 1% per week, that's not much if you think about it, but 1% a week is over 50% by the end of the year. That being said, let's say who's in the house. Let's say hi. All right, who do we have? 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 All right, we have V Bud. Okay, Cam, nice to see you. Dr. Cloud, what's going on? Matt with the cat. All right, Matt with a cat in a hat. When he saw us sitting there like that. I know it is. No, wait a minute. I know it is wet and the sun's not sunny, but we could have lots of good fun. That is funny. Mtor, Paul, Ski Man. Culturally honed. I'm not quite sure what that means, but okay. DJ Flawless, nice to see you again. Justin K, nice there. ER Reed, nice. Jules, hey Jules. Polly 127, Olympic Express, Little Black Diva, nice to see you again, young lady. Amelia Seabass, Eric Clark, Kulile Kunza. All right, Eric, Andy, Dr. Jason, nice to see you. TK, Culturally Honed. All right, Trey. Dark Horse, Otis, Zerika. All right, Matthew, Chairman Allen, Jedi Mind Tricks. These are not the drones you're looking for. Tonka Tom, Jack, Jay, Shalom, Shane, K Bassman, what's going on? Ready to shred. Kyle T. Hutch, So 70. Okay. Trey Tegind, okay. Investing. Cool Freckled Queen, nice to see you again. Sang Lashes, good evening, good evening. All right, Jimmy J, what's going on? Mate Tan, Viking, Tina, hello. Jick Me, okay. Cool BTD, okay, whatever. Casey, hey. Arlie, nice to see you there, Arlie. Who do we have over here? Ice Cream Guy. AH, okay. DJ Flawless. Cause and Nostra's in the house. Matt Guard, Brian. Hey, Cause, what's going on? Okay. Ben's, nice to see you. Sweet Den, nice to see you again. Josh, Barney. Happy me I am. Okay. Meta 3, Jan, and Dark Horse. Ben's, nice to see you. Happy me I am. All right, cool beans. All right, so that being said, good evening. Let's get the ball rolling. You look like a 10-minute trader. Okay, thank you, I think. All right, that being said, Venice Hall, what's going on? That being said, good evening, everyone. It is another week coming tomorrow morning. We look at stocks tonight to see what could be possible for tomorrow. Now, I look for the exact same thing over and over again. Good quality companies. Could we check Halliburton? Yes, of course. Halliburton, absolutely. I look for good quality companies. Now, when I'm thinking about a good quality company is a company that has been in business for a minimum of 20 years and has a minimum of at least 10 to 20 years of increased profits. I know I used to say 2 decades, which is 20 years, which is my preference. But nowadays, if you look at the dividend contenders, there's about 300 of them that are consistently profitable, anywhere from 10 years to 24 years. All right, so let's get the ball rolling. Hey, James, could you check Hal? Yes, we'll check Halliburton in a second. All right, first one on the list will be Halliburton. HAL. Now, every time I do this, you're going to notice I do the exact same things over and over and over and over again. I'm looking for 5 simple things anytime I look at the chart. It's always easy. 5 things takes me 2 to 3 seconds. Okay, you may or may not be able to see it in 2 to 3 seconds, but I'm sure you can. You ready? I'm looking for 5 things. The high, the low, where was it a year ago, where is it today, and where is it going? Well, that's plain to see, right? The bottom for the year shoots up to the top of the year. She went from $20 up to $44. That's a 100% increase. So yeah, there's going to be profit taking. There it is right there. Now she's turning around, going back up. But what's happening last week? What happened? Well, let's take a closer look. Before I do, let's check out the numbers and see what they look like. Well, this is the week of the 24th. Okay, so it's the week of the 24th. It's at 35.22. The 35s are going for 97. That's well over 2%. Think about it. If I'm going to buy this stock, I want to make sure the numbers work. Because I got 5 simple rules and I got 5 simple criteria. So if we're 35.22 and I buy it at 35.22, I sell it at 35, I want to pick up 97 cents, take the 22 off of that, blah, blah, blah. I'm still walking away with over 2%. I'm able to buy it and then sell it for less than I paid for it and still walk away with a profit. Well, stocks only go 3 directions. They actually go 2 directions, up and down. When they don't move at all, they say it's sideways because it looks that way. They don't go sideways, but it looks that way. But I don't think this is going to be a fit for this week because look at right there. Let's zoom in and see what that looks like. The last 30 days would be the 19th, right about there. Okay, this is your last 30 days. Here's your 30-day high. She drops, there's your bottom. Now for me, I like 2 days to the upside. There's 1, there's 2. I would have jumped in right there. Right there. Why didn't we see this 2 weeks ago? Doesn't do us any good now because 2 weeks ago we're here at the bottom. She shoots up last week, make a new 30-day high. Now she's dropping. So no for Halliburton for this week. That's it, just no for this week. Not no as in never, ever, ever. Just no for this week. That's it, just no for this week. Who do we have there? Nick, what's happening, Nick? Who do we have down here? Joe, what's going on there, Joe? Kim, nice to see you. Eli, nice to see you. Hi, guys. Hi, hello. All that kind of nice, neat, fun stuff. Who do we have over here? We have John Warner. How's it going there, John? All right, so no for Halliburton. What else you got? What else you got? Come on. What do you guys want to take a look at? We did Halliburton. Paulie, nice to see you, Paulie. All right, Paulie and Paul. Ronald, Mindful, nice to see you. Stay in Acapulco, okay. John Didier, need to move the TikTok cam to the left, can't see the entire screen. Sorry about that, John. There you go. Ooh, Jaboko wants to take a look at Hewlett Packard, HPQ. HPQ. Ooh, that looks interesting. Take a look. The high of the year, the low of the year. Where was it a year ago? Where is it now? Look at the momentum. Up, down, up, down, up. Well, that's clear to see. Now, this is a whole year. Now, the only reason I want to see the whole year, because I want to see where the high of the year is, and I want to see where the low of the year is, and then I want to compare to it where we are now, which is right there. And I'm perfectly okay with that. But what is it doing right there? And what is it going to do this week? Well, that's my concern. I want to know what's it going to do this week. Well, we're at 24.84, And we all know the closest strike price to 24.84 is going to be 25. And 25 is going for 52. That's over 2%. All right, let's do this one. We zoom in the last 30 days. What do you think? Okay, 30 days ago, we're here. The high, the low, where was it? Where is it? Look at this, down, up, down, up. Here's your new bottom, 1 day up, 2 days up. If this thing opens right there tomorrow, then it's a definite yes for me. You've got to figure out what works for you. Jack, what's going on, Jack? Let's do the 25s for tomorrow. Now, if you didn't know, I do covered calls. They're simple, they're safe, they're predictable, and they're easy. We're going to do the 25s. There we go, right there. And this is what it looks like, and this is what it sounds like. Are you ready? Here we go. One covered call, Hewlett-Packard, HPQ. 24 July 26. That means this expires this coming Friday, 5 days away. The $25 call option. Well, here's my profit, 72. Here's my investment, 24.28. Okay, what does that look like? Lloyd, what's happening, Lloyd? Nice to see you. Okay, so we need the calculator for this. Damn it. There's always a way of doing this. There we go. Calculator. There it is. There we go. Okay. So, calculator. First thing I want to do is take the profits and put the profit into the calculator so I can calculate what is my rate of return for 5 days. Because if I jump in this tomorrow morning, well, this option expires Friday, 5 days away. All right. So now always check the numbers in the morning. Before you do anything, you should always ignore some stupid idiot online. That's me. But if it makes sense to you, do your own due diligence. What do the numbers look like? Do I like this company? Is this company worthy of my personal money? Well, that's a you question. Now, just because I like Hewlett-Packard and it looks good for me, that doesn't mean you should do it. You should check it out for yourself to see if it makes sense. Thank you, dead anarchist. Oh, thank you. A little disturbing, but all right. Okay, so the profit right there, 72. We put that into the calculator, find out what my rate of return is, saying lashes. And Joby, we'll take a look at that in a minute. Sit tight. All right, what did I say it was? 72. 72, and we're going to divide it by the cost of the trade, including commissions and fees, right there, 2,428. Now, oh my, I got a bad hair day. I was out at the pool. Mowing the lawn in the rain, all that kind of nice, neat, fun stuff. Hung out with Grandma all day today. Don't know how many more summers she has, so this could be her last one, so, you know. It's always tough at the end of the year, at the end of your time, because my mother's now at the end of her time, and it's slowly ticking away, and I can see it eating away. It's a horrible scenario. You know, sometimes it's like, I'm glad they went fast. Car accident, drunk driver, house fell down, something. Quick. Who wants to go slow? Ugh. It's just terrible just watching it. 24.28 is my investment. Now, when I say my investment, 24.28, what I'm talking about is creating weekly cash flowing assets. Okay, now, all my assets are stock companies. I put my money into the, what's that saying? NVTS, saying last year, we'll take a look at that. I put my money into the economy, okay? So I believe in the American economy. My brothers, my sisters, my aunts, my uncles, the guy down the street, we all work here. We live here. This is our country. Well, where are you going to put your money? Your money's got to go somewhere. Because when you retire, and trust me, it's coming whether you like it or not. You may not agree with me on a lot of things, but tick tock goes the clock. You can't stop it. The only thing you can do is prepare for what's coming. Well, what's coming is you got two choices. Learn to do it yourself or give up accountability and let someone else do it for you. All right, so I'm going to save this one because it's 2.9%, and I like 2.9%. I actually even like Hewlett-Packard, but I'm going to wait for it to go up one more day because remember, I like 2 days to the upside, and on the third day I'll jump in. So it's a possibility, but it's a good possibility. I think 2.9 is a good possibility. All right. We're going to save that, get this stuff out of the way. Get that out of there, get that out of there. Wait a second, wait. There we go. All right, let's get back to here, to there, and to there, and here we go. All right, oh, there it is. Let's open this up. There we go. One covered call, Hewlett-Packard, HPQ, 24 July 26. That means this option is going to expire this coming Friday, the 24th. All right, 25 call option. Well, my profit 72, my investment is 2,400. Now, to make any kind of return on your money, you have to put it somewhere. Whether you want to put it in real estate, whether you want to put it into gold, whether you want to put it into collectibles, whether you want to put it into fine art, you can put it into anything you want. I like good quality companies that are consistently profitable and that have been around for 20, 30, 40, 50 years. Well, that works for me. Okay. 2.9. I like 2.9. $2.9. And this is HPQ. Next. That's it. Next. Simple. Next. HPQ. Now, we look for 5 good quality companies every night. We just found one, Hewlett-Packard. Do you like it? Do you not like it? It's a you question. Either like them or you don't. All right. Wally World, HPQ, Rocket Labs, Lady Jane, grew gray apples. What does a gray apple even taste like, Lady Jane? Rocket Labs, RKLB, right? RKLB. RKLB. Rocket Labs. No. Who came out? Lady Jane, sorry, hon. Seriously. Now, don't get me wrong. You may like Rocket Labs. Take a look at the chart because charts don't lie. Numbers don't lie. The top is right here, 151. The bottom is right here, 39. Okay, so last year we're at, what, 40, 50? Okay, we went up, back down, hit a bottom at 39, shot up to 150. 39 to 150. That's a big jump. Well, here's your profit taken. Now we're at 67. However, look at what she's doing for the last 30 days. Okay? 30 days ago, we're right here. She dropped, retraced, and dropped again. So this is going to be looking for a new bottom if you like Rocket Labs. Wait, just be patient. As soon as the bottom shows up, she will turn around eventually and go back up because stocks go down to a point, then they turn around, go back up again. Sorry, kiddo. Wally World, Jacoba. Wait a minute. Jaboka. Okay, Jaboka wants to take a look at Wally World. WMT. Well, looks interesting. Here's the top. Here's the bottom. Here's where it was. Here's where it is. She shot up, pulled back. Now she's up again. What happened on Friday? Because what happened on Friday doesn't look very good, but let's zoom in a little bit closer. Because it's definitely going to be a no for today. Okay, the reason being, 30 days ago, we're at 120. We dropped down to 107, shoot up to 118. But what happened on Friday? Okay, she went from 107 to 116, which is $9. That's not even 10%. Pulled back up. It's just, I want to see what happens on Monday. If she goes above that, maybe, because the high is right up here. Here's where we are currently. Here's the high, and here's where we are. So we have that much space right there. But the 114s are going for 166. Okay, that kind of works. If you like Walmart. What else we got? All right, Mr. Premium. How about Verizon? Ooh, Verizon. VZ. Did the exact same thing Walmart did. The top, the bottom, where was it? Where is it? Look, it's down, up, down, up. What happened on Friday? Seriously, what happened on Friday? Let's take a look. Okay. Here's the high. She drops the bottom. She's shooting up. But Friday, she dropped. She gapped up at 44.60. And then she closed at 43.50, something like that. Altria. I like Altria, and I have some Altria. Hell no. Sorry, I don't buy at the high. It just doesn't make sense. It's at the high of the year. That's the high of the year right there. Why would I buy at the high of the year? No. Ford, let's take a look at Ford. Now, Ford makes more sense. Okay? Here's the high of the year, the low of the year. Where was it? Where is it? Up, down, up, down. She's going up. That's a definite up. See, she went to almost to 18, and now we're at 14.20. It's a lot of room to move. Look at your last 30 days. Now, please tell me you can see this. The high, the bottom, now she's jumping up. Look at all that space we got to go. 14.23. I do the 14s. I lose 23 cents there, just barely 1%, or 14.50s. It's a little bit more profitable. Let's do the 14.50s. Let's get out of this. Covered calls. The 14.50. Here's what she sounds like. One covered call. Ford. 24 July. That's this coming Friday. Okay, fine. The 14.50. Well, the stock's at 14.25. Kind of like right in between the 14 and the 14.50. So you get to choose. Do I want to do the 14, be a little safer, or do I want to do the 14.50, make a little bit more money, but have to work for it? So 44 is the profit. 1,400. 44 divide 1406 gives you a rate of return at 3.1. Well, it's Ford. Number one, it's Ford. It's been around for over 100 years. Now, granted, they don't have dividends that have increased for 20, 30 years, but they have been in business for over 100 years. JEPQ, Michael, we'll take a look at that in a little bit. You're not going to like what I tell you, though. So 3.1, we're going to save that one. $3.1 for Ford, if you like Ford. Let's clean this up. All right, here we go. There she is, right there. One covered call, Ford, which is just a plain old F. That's it, F. 24 July 26, 1450 is the call option that I'm looking at. Well, it's paying $44, but I only have to put up 1400. Okay, well, 1400 is not bad for one trade, making what was it, 3.1%? Was that right? 3.1? 3.1%. Yeah, why not? For 1 week. And do you like the company? That's another good one. 3.1, and it is Ford. There we go. That's 2. We need 3 more. Uh-oh, AT&T. Mr. Premium, it would be great if you start talking about other things like the Greeks, profit percentage, days to expiration, cash secured puts, when to roll, spreads, PMCCs, etc. Well, Mr. Premium, think about this for a second. There's a lot of information that I could regurgitate for you. I'm not 100% sure what you're looking for. But what I'm doing is I'm giving away, I'm not trying to sell anything to anybody. I'm giving away a strategy which I created for my 9-year-old daughter. 9. When she was 9, she asked me if I could teach her how to invest in the stock market. Well, I said, fine. So the criteria, okay, Mr. Premium, it had to be simple, because she's only 9. It had to be safe. She's only 9. Predictable, so she knows what she's doing. Consistent, and no way for her to lose. This was created for a 9-year-old. I'm giving it to you for free. Okay? Car Steven, what's happening? So, simple, safe, predictable, consistent, no way for her to lose. That was for my 9-year-old daughter. Okay. All your shows, people just spit out tickers, and that's all that's talked about. Still like your show. Well, thank you kindly. But here's the thing. I've spent literally thousands upon thousands upon thousands of dollars for my education. Okay? Now, I have no problem whatsoever giving it away. All right? But here, I'm considering this as a stepping stone, a doorway into trading, because it's safe, it's predictable, it's consistent. Okay? I cannot find a safer trading strategy for newbies, or for people just starting. Now, you're absolutely right. The Greeks have a lot to do with everything. Okay? Also, spreads are great. Calendar spreads, debit spreads, credit spreads, four corner spreads, cross margining spreads, whole bunch of things are great, but they also carry more risk, and they have more time that is required to learn all the ins and outs, especially once you start spinning out the Fibonacci retracement crap, the RSI indexes, the MACD. There's so much out there, it is extremely confusing for some people, especially beginners. This is not a professional trader show. This is more for people just getting started. And yeah, I'm perfectly okay giving this one strategy away for free. Okay? I do more complicated strategies, but that's in the paid trading group because it's more in depth, more learning. That kind of makes sense. Lucky! Thank you there, Mr. Lucky. How much you charge to Lucky? Dude, you've been coming here every single night for about 2 months. Dude, just drop me your phone number. I'll give you a call and you and I can chat to see what you're looking for. Okay? All right. All right. Where are we? Hold on. Where are we? Okay, we looked at Rocket Lab. We looked at HPQ. Days, hello. Roy, how you doing? Nazareth. Joy, Dory, Belly Store? Okay, interesting. Alan. Saying Lashes, NVTS. And what is NVTS? NVTS? NVTS. Same thing, kiddo. Seriously. You at the high of the year, a couple of months ago. Now we're just dropping, looking for a new bottom. Now, if you really like it, just sit tight. Wait for the bottom to show up. Then you got to figure out if you really like the company. I should be pointing this way. I'm pointing to my big screen. But if you really like it, wait for the bottom to show up. Because stocks do two things. They go up and then they go down. Well, here's your top. You got your profit taking. Okay, so 34 is the high. They dropped $22. That's a big drop. That's over a 50% drop. How much further is it going to go down? Well, we don't know. But if you like it, keep your eye on it. Maybe this week she'll find the bottom and turn around. What do we have over here? Rocket Lab, blah, 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 blah. Casey, let's say you did this trade. Are you assuming that you'll be assigned at the end of the week? Good question, Casey. I'm not doing this trade because it's still dropping. It could be lower tomorrow. It could be lower Tuesday. It could be lower Wednesday. See, when I say I look for the bottom, when the bottom shows up, I want 2 days to the upside. And then on the third day, I will jump in. I wouldn't do this trade. But, Casey, just what you're saying, okay? Let's say you did this trade. I'm going to assume it was one of the other ones. Okay, are you assuming that you'll be assigned at the end of the week? Now, Casey, it's easy to see or to assume where a stock's going. Because by looking at what I'm looking at, okay, Friday was the bottom. Then I take a look at the last price, 1146. Then I look at the, what do you call it, the aftermarket hours. Well, the bid's 1159, which is higher, and the ask is 1168, which is higher. Okay, so both the bid and the ask are higher than the last traded price. There's an extreme high probability that this is going to open up higher on Monday. But that's just one day up. I want 2 days up, and then on the third day up, I will jump in. But if I'm going to jump in on a Monday, I would like to be out by Friday. It doesn't always work that way, but in a perfect world, yeah, I like to be in on Monday and out on Friday. But I ask myself 5 questions every single day. Okay, number one, what did I buy? Well, this is Envitas, 1146. So if I buy it at 1146, I'm going to do the closest strike price, which would be the 1150. Well, look what the 1150 is paying. The 1150 is paying 70 cents a share. That's more than 1%. That's what I'm looking for. However, what happens on Tuesday, Wednesday, Thursday, and Friday, nobody knows. Just because the chart looks like it's going one direction, it can change any day. What we're trying to do, Casey, is put the odds and probabilities in our favor. Well, Envitas is really not on my list because I like the Dividend Kings. That's 5 decades of increased profits. The Dividend Aristocrats, 25 years increased profits. Dividend Champions, 25 years increased profits. I know the Champions and the Aristocrats have the same amount of profits, but the rules are a little bit different for the Aristocrats than it is for the Champions. But still, 25 years. And then you have the Dividend Contenders. 10 to 24 years increased profits. And then just for the fun of it, we're going to peek over Warren Buffett's shoulder and see what he's doing. So that's 5 lists. Dividend Kings, Dividend Aristocrats, dividend champions, dividend contenders, and anything on Warren Buffett's list. And then what I'm looking for is always the same. Where's the high? Where's the low? Where was it 30 days ago? Where is it now? And where does it look like it's going? Well, this one looks like it's going down. So this one's going to be a no for this week. Even though the bid and the ask in after hours are both higher, which gives me the indication that the market maker is going to open it up higher on Monday. Fine, that's only one day up. I'm looking for 2 days up, and on the third day up, I will jump in. Okay, that's my rule for me. You got to figure out what works for you. Okay, fine. So, no for this one for this week. But I would, if you like it, keep your eye on it. Because if she does open higher on Monday, that's just one day. You have to decide how many days from the bottom going up is your indication to jump in. You may like 1 day. You may like 2 days. You may like 4 days. You may like 6 days going up. We're all different. We're all looking for something different. Well, we're looking for the same thing, but we have different risk factors. Philip, what's going on, Philip? Big Robert, nice to see you guys. Thanks for stopping by. So Casey, I hope that answers your question. Next, before I go on, let me address something. Every night, seriously, every night I always say, if you want to have a conversation with me, you need to drop your phone number in whatever. Now I got 13 different platforms that I'm live streaming on. Each one has a bio in it, which gives you information about me. So if you want to have a conversation, I'm an old dude. I got gray hair. I'm a Gen Xer. If it ain't broke, don't fix it. We really don't care what your problems are. And that's just Gen Xers in general. Okay? You have an issue? Fine. It's a you thing. Don't make it my thing. What I'm trying to get at is, if you want to have a conversation, I don't charge anything. I'm not trying to ask money from anybody. I'm giving this information for free. Just drop your phone number. I will call you and we will have a conversation. I don't text. I don't Instagram. I don't WhatsApp. I don't Telegram. I don't instant message. I don't do any of that stuff. I'm an old dude. You need to pick up the phone and have a conversation the way that Ma Bell intended it to be. All right. That being said, let's move on. Can you look at AT&T? Didn't we look at AT&T already? Oh, same thing. What is this? What happened on Friday? Why is this like the fourth stock we looked at that Friday had something bad? Here's the high, the low. She went up. What happened on Friday? Before I do anything, I want to know what happened on Friday. Because your bottom's here at 20. She jumped up to 22.50. That's a 10% increase. Well, could 10% be enough for people to jump out? Could be. It's more than enough for me. I'm only looking for 1 or 2%. But there is 10% right there. Okay, so 21.74 lower, 21.83 higher. That's right where it's supposed to be. Okay, the last trade, 21.81. Bid, 21.74. That's normal. Ask, 21.83. That's normal. So there's nothing really surprising there. But do you like it? Are you okay? See, here's the bottom here. Now she's going up. Fine. 21.81. We'd be looking at the 22s. The 22s are paying 44, not quite 2%, but let's take a look at it. Let's do AT&T because we like AT&T. Well, I like AT&T. It's a $22 stock. How can you go wrong? Covered call, 22. There it goes. Here we go. Here's Johnny. One covered call, AT&T, or just T. That's it, T for 2. 24 July, that's this coming Friday, 5 days away. The 22 call options paying $64. My investment's 23. What does that come to? Well, let's find out. And we're going to need the calculator for that. 64 is the profit. We're going to divide it by our investment, which is the cost of the trade, including, there it is right here, cost of trade, including commissions and fees. Well, I can't really bend that much. Not as young as I used to be. Okay, that's going to equal 3%. Well, what's wrong with 3%? Where are we? Hold on. RCI. Dylan, what is RCI? All right. Okay, we're looking at AT&T now. Okay, Dylan wants to take a look at RCL, Royal Caribbean Cruise Line. Okay. Okay, we're going to save this one because it's 3%. This makes number 3 for the evening. Remember, we looked for 5. This is 3. Let's clean up the computer while we're waiting for that. Okay, back to where we started from. Here we go. Oh, went wrong way. There we go. There it is. One covered call, AT&T, 24 July. That's this coming Friday, 5 days away, the $22 call option. Well, the stock's at, what is that, 21.80. It's at 21.80 at the moment. We're going to sell the 22s, pick up $64 per contract. Now think of it. One contract, $64. 2 contracts, $128. So on and so forth. Here's my investment, $2,100 for 3%. I like 3%. That's it. T. That's it. Number 3. We need 2 more. Is that 3? There's 1. There's 2. There's 3. Yeah, that's 3. Okay. All right. We need 2 more. Who's got it? Dylan, RCL. Dylan, what the hell's RCL? RCL. Royal Caribbean. Ooh, nice. That's a nice one. Take that. Take a look at that one. Hold on. Here we go. Same thing. The high. The low. Where was it? Where is it? Look at this. All over the place. But that is the important part right there. Okay? That's the high of the year, the low of the year. Look at the motion. Up, down, up, down. Nice. Nice motion. Up, down, up, down. Great. But where are we going next? That's what I want to know. Where are we going next? Now that's easy to see, isn't it? Look at it. 30 days ago, dropped, shot up nicely. There's your 30-day high, your 30-day bottom right there, going up nicely. 286.96, 286, the 287 is going for 680. If you like Royal Caribbean, and it's always going to come down to that question. Do I like this company? Does this make sense? Is this someplace where I feel safe putting my money? That's a you question. I can't tell you what to do. All I can do is point out all your shows. People just spit out. Yeah, I get it. Thank you, Mr. Premium. Hey, Joey, how you doing? Okay, Royal Caribbean. Let's do this one. The 300s. What? Hold the phone. No way. 387. There it is, right there. 287, right there. And here we go. One covered call, Royal Caribbean, RCL. 24 July 26. That's this coming Friday. The 287.50 call option. Well, if I'm buying it for 286.96, the 287 is right there, right around the corner. So 287.50, 892, 820. Sorry, 829 is the profit. But 27,000. Wow. Okay. Well, it's a almost a $300 stock. Okay. Calculator, if you please. 829 is the profit. 829 is the profit, and we divide it by the rate. To find the rate of return, we divide it by the cost of the trade, including commissions and fees. Wow, bending like that. 27,921. 27,921 comes to a grand total of 3%. Okay. %. Number 4. We got 2 more to go. This one more. One more after this. All right, let's get rid of this. Get rid of that. Back to that. Back to this. To this. Here we go. You ready? Royal Caribbean. There we go. One covered call, Royal Caribbean, RCL, 24 July 26. That's this coming Friday, 5 days away. The 287.50 call option, 829 is the profit, 27,000 is the investment. Oops, I hit the wrong button. Let's try that one more time. What did I say? It was 3%. 3%. RCL. Here we go. Let's take some questions. We got another hour to go. Another hour to go. What kind of questions do we have? All right. Michael wants to take a look at, holy shit. Okay, Black Label Men's. Okay, Micron, no. The reason I'm saying no to Micron, you ready? This is the reason. Tell me what you think. I don't buy anything over $400 or $500. This thing jumped all the way up to $1,200. Okay, started out at $100 last year, jumped to $1,200. Now she's coming at $848. Yeah, I don't think so. Andy Brar, how are you doing today? Thank you. Michael, JEPQ. Michael, you're not going to like this. You're not. Everybody asks me about this. I show it to them. And say, oh, I don't like that. JEPQ. All right. Michael, you ready? Here we go, Michael. JEP, what? A little too far. There you go. JP Morgan, NASDAQ Equity Premium Income ETF, JEPQ. La 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 la. 58.51. Okay. Now I want to go over this side so you can actually see me. I want to go and take a look at historical data. Well, I want to see, are they increasing their profits year after year after year? Because the platform that I use to do my trading doesn't give me that information. So I want to go take a look at historical data, and then I want to see firsthand what those numbers look like. Historical data. Okay. Now, Michael, historical data. Okay, you have the date. Every single day, every day that this stock traded, you'll have these numbers here. The date, the opening price of the day, the high price of the day, low price of the day, the close, the adjusted, and the volume. Every single number you would expect to see on historical data. Who's that? Rapplegate. Really? Rapplegate? That's an interesting name. So, I don't want to look at the numbers. I really could care less about those. What I want to see, Michael, is I want to see the profits. And to find the profits, they're right here. Dividends only. Now, Michael, and all you other guys and girls, a dividend is a company's or the ETFs or the entity, whatever you want to call it, if you're buying shares, well, if the entity is profitable, they will give you a share of those profits, also known as a dividend. So if the dividend increases, that means the company's making money. If the company makes money, the dividends increase. Once the company starts losing money, the dividends decrease. It's simple as that. It actually really is. It's simple as that. As the profits increase, so do the dividends. As the profits decrease, so do the dividends. It's actually that simple. Increasing profits, increasing dividends. Decreasing profits, decreasing dividends. Okay, we got that, Michael? Because you're not going to like what you see next. Here it comes. All right, I want to see all the dividends right there, dividends only. And then I want to see every single dividend they've paid out. All of them, the maximum amount. There we go. Oh, before I continue, for those of you that are new here, have never been here before, the screen behind me, this screen behind me, that is live on YouTube. So if you can't see these little tiny numbers on your phone, your iPad, or whatever you're watching it on, go in the other room. You bought that big screen TV for a reason. Let's use it. Okay? I get calls all the time. People say, yeah, I watch you on the big screen. Hey, great. All right, so JEPQ, dividends only. Let's take a look at all the dividends and see just how profitable JEPQ is. Fair enough, Michael? Here we go. All the way back as far, holy shit, what are you kidding me? Seriously? June 1st, 2022? That means this company's 4 years old. That's it, 4 years old. Because they only have 4 years of dividends. Well, number one, that's a no. I want 2 decades of dividends. 4 years, any company could do 4 years. All right, anyway. 37, very first dividend paid out. 37. 34 is the second dividend paid out. Michael, it's a 10% decrease. Michael, 37 to 34 is a 10% decrease. The very first one, 10% decrease. Doesn't get any better, Michael. It sure don't. That doesn't work. Doesn't work that way. All right. Here we go, Michael. You ready? Lower, higher, higher, lower. Higher, lower, higher, lower, lower, higher, higher. Michael, can you explain to me why this went up 1, 2, 3, 4, 5, 6 times and why it went down 5 times? What is that? 1 step forward, 1 step back, 2 steps forward, 2 steps back. What the hell is that? It's gone up 6 times and it went down 5 times. Let's keep track. Well, first of all, it's only 4 years old. We're not going to get a lot. But we have 6 times it went down. There's your 6. Okay, we stopped off at May 2023. Okay. May 2023. Higher, higher, lower, higher, lower, higher, lower, higher, higher, lower, lower, higher. Okay, 1, 2, 3, 4, 5. One, 2, 3, 4, 5. Now we left off at March 2024. Let's keep on going. Okay, March 2024. Higher, 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 lower. Higher, higher, lower, lower, higher, lower, lower, higher. 1, 2, 3, 4, 5. One, 2, 3, 4, 5. We left off at March 2025. Okay. March 2025. Higher, 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 lower, 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 higher, 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 lower, higher, higher. All right, 4 times. 1, 2, 3, 4. Now we left off at April 2026. April 2026. Higher, lower, higher. Okay. All right. So this thing's 4 years old. Hold on. Got to make sure these people know that I'm real. There we go. All right. So Michael, this thing's only 4 years old. Okay. So in 4 years, this thing pays monthly, right? February, March, April, May, June, July. Okay, so it pays monthly. So that's 4 years old. That's 48 months. 48. Okay? 48 months JEPQ. All right. So out of 48 months, 5, 10, 15, 21. It's 4-year-old company. 4 years. Out of those 4 years, there's 48 months. 21. Not quite half, but pretty damn close to half the time it went down. Explain to me why that's good? I didn't go to college, and I admit that I didn't go to college, so I'm not as smart as some of you guys out there, but I do know that if it's 48 months and 21 of them are down, no, thank you. What I'm looking for, hold on, Mike, I'll show you what I'm looking for. Now, Michael, when I say consistently profitable, ready, Michael, this is what I'm looking for. Now, what I'm showing you, Microsoft. Now, Microsoft is a dividend aristocrat. 25 years consistently increasing their profits. Let me show you what that looks like. I want to see all of them. Here we go. We're going to go all the way back to 2006. I don't want to go back too far. Oops. All right, you ready, Michael? Check this out. All right. 8, 9, 10, 11. Yeah, I know it's kind of boring, but it's still increasing. 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83, 91. Every single year, Michael, it went higher and higher and higher and higher. That means every year they made more money, more money, more money, more money. That's what consistency of profitability looks like. They make more money this year than they did last year. Made more money last year than they did the year before. JEPQ, well, it's 4 years old, number one. In almost half the time they went down, not up. So I'm not looking for something that's mediocre and goes up half the time and goes down half the time. I'm not looking for that. I'm looking for something that's consistently profitable year after year after year after year. Okay, JEPQ, no. Micron, way too pricey. John Didier, Home Depot. I like Home Depot. Home Depot. Here we go, Home Depot. HD, Home Depot. Now, if you didn't know, Home Depot is a dividend king. For those of you who don't know what a dividend king is, well, a dividend king has 5 decades. Hold on. 50 years consistently increasing the profits. 50 years. Well, why not? Okay, so Home Depot, quick. Here's the top, here's the bottom, here's where it was, here's where it is. Up, down, up, down, up, down, up. Well, That looks good right there. Let's zoom on in. Before we do, 338s, the 337.50s, $5. Yes, those numbers look good. Who do we have over here? Mike, nice to see you. Now, I'm not quite sure. NYL? Nil? All right, nil. All right, cool. Joey, thank you. Demetric Caldwell. Hello. All right, so Home Depot. Here's my concern right there. Again, that Friday scenario. What happened on Friday? Okay, up, down, up, down. She's definitely going up. Here's your top. Here's your bottom. 322, 357. Okay, up, down. That gap filled right there, and she's still going. But what happened on Friday? We might have to wait on this one. Vegas Knights, Meta. Really, dude? Meta? META. We're still on Yahoo Finance because apparently somebody likes Meta. That page can't be found. What do you mean that page can't be found? Well, that page can't be found. META. All right, well, let's find out. Meta. Meta is better. Oh, $27 per share. 643. Well, $643 per share. Dividends only. All the dividends. See, here's a problem I have with Meta. Okay? 3 years. That's it. February 2024, 50 cents. 2025, 52.5 cents. 2026, I love saying this, okay? That cheap bastard won't increase his dividends. Look, 50 cents, 52.5 cents. This year, he wouldn't increase it, cheap bastard. Meta has got 2 years of increased dividends. Two. I'm looking for 2 decades. That's 10, 20 years. Sorry. And it's not increasing. He's paying out the same dividend this year that he paid out last year. Vegas, Apple. Hell no. That was quick, wasn't it? I don't buy anything at the high. I don't care what it is. See, I've heard it all my life. You want to make money in the stock market? Buy low, sell high. Why the hell would I buy at the high of the year? No, and no. GMC Trades. How you doing? Drew. Smile, Ken. Gin Clay. Pay attention. This man is so smart. Cover call. Well, thank you for that. Not forgiven. What the hell is that? Where was that? I gotta go backwards. Right there. Thank you. Not given. Michael. Covered call, cash secured puts. This man knows his stuff. Add dividends to the equation and 1%. Thank you, Michael. I don't know why Den canceled that one. It has about 35 imitators. Be careful. Yep, thank you, sweet Den. Nicole, how are you doing today? Thank you there, Red Cord. Observer, the wisdom is like changing. Like changing or life changing? I don't know. Dan, AST. What the hell's AST, Mr. Dan? AST. Ascent? Sorry, dude. No options. No thank you. Weekly options. Just right up there. Weekly options. Oh, ASTS. Wait a minute. ATST. What the hell is that? ATST. That's a no also. Casey. It was for one of the two you saved. Oh, thank you there, Casey. Which one? This one I can't see. Esteban, how you doing? IVZ. What the hell is IVZ? IVZ. No. Who came up with that one? Okay, user 1568084, blah, 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 blah. I don't do monthly options. The numbers just don't work in my favor. Okay, August, September, October, January. Monthly options, I can trade once a month. That doesn't work for me. I want weekly options because I'm requiring weekly cash flow. Okay? Yulu! What's happening, Yulu? How you doing? Okay, what do we have down here? Thank you there, Joey, Dimitri, William Anderson. Mr. Anderson. All right, Mr. Anderson wants to take a look at TAP. Am I reading that right? Molson Coors. Okay. Dude, I don't do monthlies. The numbers just never work in my favor. If I'm trading on a weekly basis, I can only trade a monthly option once a month. Yes, we already looked at AT&T. Yes. Go ahead, keep going. I'm just turning the volume up. Nick. I can hear you, Nick. All right, I can't hear you. All right, just asking when. Oh, come on. What? What?
On Friday, real quick question. I remember you.
All right. Sorry, Nick. It's like just having issues here.
You can hear me?
Yeah, on Friday, say it again. On Friday, what?
You muted yourself.
Yeah, I see that. Ah, come on. Come on. Tap to speak. Okay. How's that, Mr. Nick? Ryan, how you?
So, I was just wondering on Friday, I remember you mentioned you had a maintenance call on one of your accounts. And I was wondering, is that similar or the same as a margin call?
Maintenance call and margin call is the same thing. That means you got to do something dumb shit. That's what that means.
Oh, it is. Right. And then I also remember you mentioning that you were going to sell some covered calls to get out of it.
Correct. Do you remember the conversation we had a couple of weeks ago? If
I
you,
was just wondering because.
yeah, but Nick, do you remember? Yeah, but wait a minute, second, Nick. Do you remember the conversation we had a couple of weeks ago about margin? I like to have a certain amount set aside just in case everything drops. Do you remember that?
So, yeah, I remember.
Yeah. So everything dropped. Now I have to come up with a short.
Right. I was just wondering because I don't know if it's because we're trading on different brokerages. I use Robinhood. But
Yeah.
when I was near a maintenance call, it wouldn't let me sell any options because it said I was below my required maintenance buffer, I guess.
Exactly. So in that case, it's a little bit trickier because you have to buy back an option in order to sell one. And it's a little bit complicated to get out on Robinhood because you got to sell one, buy back one, sell one, buy back one, sell one, buy back one, and you got to do them like one at a time or two at a time, whatever you can afford. Sometimes you have to close out a position to release some cash to be able to buy back some options to be able to sell new covered calls.
Right. Okay. And on Thinkorswim, you can just straight up sell new covered calls
Nope.
without having to.
No. It's the same thing, depending on how much money you have available. So I have, yes, I have a margin call on my Robinhood, but I don't have a margin call on my Thinkorswim.
Okay.
So whichever position you're in that caused that, well, it's a you got to do a little bit massaging, a little tweaking here and there, and then try not to use so much margining.
Right.
Yeah, I like to use 60% margin. Well, my stocks have dropped down 50%, so now I'm stuck. Wait a second, where'd that 10% go?
Yeah.
So that cushion that I had wasn't as cushy as I thought it was.
Right. Yeah, that's the same position I fell into.
Yeah, but don't sell at a loss. You know what? Are you gonna be on tomorrow morning?
Yes, sir.
All right, we'll take a
Once I
look.
receive the link.
Yeah, we'll take a look at it tomorrow morning to make sure that you can get out of it without. I hate throwing more money in. I mean, I put money in every week, but I hate putting money in on a margin call. I would prefer to push it out 2, 3, 4 weeks to get more premium and just sit on it and wait rather than putting more money in.
Right.
Make sense?
All right. Yes, sir. Thank you.
All righty. Okay, so
Good night.
yeah, right. I'll see you in the morning. I'll be chatting with you in the morning. Great. Tap. William. Oh, sorry. More for long term and divvy. What would make you think that's for long term? But then again, I'm a little bit different than you. I'm already retired. My idea of long term is 30 days. And here's the thing 30 days, hold on, 19 would be right there. Let's move this over so you get a better view of it. Okay, so who came up with this one? William. All right, you ready, William? Take a look at this. Okay, William, right here is 30 days. Okay, down, up, down, up, down, up, down, up, down, up, and then down. That's 30 days. Now, tell me, where is it going to be in another 30 days? Because look, let me go do it this way. Okay, watch this. Okay, down, up, down, up, down, up, down, up, down, up, down. That's what it's done the past 30 days. So if I'm going to do a 30-day option, which would be August 21st, I would need to have a good idea of where do I think this is going to be in 30 days. It's not that easy. Okay, so let's take a look. All right, so we're at 40, 90, 93. They don't have a 41, so we're going to look at the 40. And if I buy it at 40, I'm going to lose 93 cents right off the top. So the 40 is giving me 225. So if I take the 93 off of the 225, well, now I'm walking away with $1.37. All right, $1.37. All right, well, $1.37 on a $40 stock. Let's get the calculator. $1.37, and we're going to divide it by the purchase price. 40.93. And that gives me a whopping 3.3%. Hold on. Don't get too excited about 3.3. Okay? 3.3% for 1 month. Well, think about it. 3.3% for 1 month is over 37% by the end of the year. Okay, but I got a minor problem with that. It's only 37%. It is 33 days. Well, there's 7 weeks in 33 days. So 7 divided by 33 is not quite 5, because 5 would be 35. Is that right? 4 is 28. So it is 5. So we get to divide that by 5. Divide 5. So that gives me 0.66% per week. Now, it's not a huge difference. The difference between 1% and 0.66. Well, I don't know about you, but I would prefer 1% a week, and trying to figure out where a stock is going to be next is not the easiest thing in the world. So I don't do monthlies because they just don't work for me. So no. That was a long way to say no, wasn't it? No. Yes, we already did AT&T. INV is a no. Oh, IVZ? What the hell is IVZ? IVZ. That's a monthly also. Okay? It's high of the year and it's monthly options. No. I don't buy at the high of the year and I don't do monthly options. How did I do last week? Wait a second. Oh, well, I think I did 4% last week. We already looked at AT&T. Johnny, how you doing? Procter & Gamble. Camp Road, how you doing? Haven't heard from you in a while, Camp Road. I'm pretty good with names. All right, Camp Road, what are you thinking? Procter & Gamble. Here's the top, here's the bottom, here's where it was, here's where it is. Up, down, up, down, up, down. What's going on right there? Let's zoom into that. 150, the 150 is going for 160. That's over 1%. But what does that number look like? I'm going to say no. Sorry. The only reason I'm saying no is it's at the 30-day high. Up, down, up, and it's at the high of the year. Well, not the high of the year, but the high of the 30-day period. Now, don't get me wrong. I like Procter & Gamble. They've been in business for over 100 years. They also have 5 decades of increased profits. But if you're at the high of the 30-day period, I don't like buying at the high of the 30-day period. Camp Road wants to take a look at Next. It's weird, there's an actually stock called Next, NEXT. Sorry, dude, it's a monthly. I don't do monthly. But you already knew that, though. You've been here long enough. You know I don't do monthlies. Ryan wants to take a look at Colgate-Palmolive. Interesting. Take a look, Ryan. You ready? The high of the year, low of the year. Where was it a year ago? Where is it today? Okay, down, up, down, up. What's going on right there? Let's zoom in. Here's your bottom. Here's your top. Here's where it was. Here's where it is. Look, up, down, up, up. But again, too close to the high for me. Don't get me wrong. I love Colgate-Palmolive. I do. But I always want to make sure everything looks right. And it just doesn't. Mesh, dude, I haven't seen you in a while. How you been? Nice to see you. Adam Volsky wants to take a look at Microsoft MSFT. Ooh, nice. Take a look at Microsoft. The high, the low. Where was it a year ago? Where is it right now? Okay. Down, up, down, up. Well, that's easy to see. It's bouncing off the bottom of the year, and then we're right here. Okay, the 400s are going for $6. Well, that's 1.5%. Okay. Well, let's zoom in a little tighter, see what that looks like. Uh-oh. Look at this. 350 to 405. That's a $55 jump. A $55 jump on a $350 stock is about 15, 16% here to there. Well, she went up, pulled back, and then went up again. But still, that's a nice jump. Think about it. Do you really want to jump in there? See, the high was Thursday. Friday, it pulled back. So no to Microsoft for this week. VIX went up 15%. Yeah, but see, you can't do covered calls on the VIX. I tried it once. It just didn't work. Look at it. And the VIX no. Okay, Intel. Let's take a look at Intel. INTC. Oh no, look at that. Drop, look at this. Up, down. Looking for a new bottom if you like Intel. Sorry, it's the high, it's dropping. As soon as she finds the bottom, it turns around. Maybe, but not this week. What's the goal? The goal is 1% a week. Andy Brower, thank you. Procter Camper, we looked at that one. We looked at Intel. Albert, hello, James. Can you evaluate when? You mean Wendy's? Hell no. Now, who came up with Wendy's? Albert. Now, I don't know if you already have Wendy's, but if you do, I can't tell you anything you want to hear because you're not going to like what I hear. Regardless of what's going on here. Don't even pay attention to that. Look at this. 0, 0, 0. Well, when the stock goes down, such as this, if the stock is not offering you any premiums, you can't sell covered calls against it because the numbers just aren't there. Sorry. What the screen mean? Lilully? I have no idea what that means. What the screen mean? Thank you, Mesh. One meditate. Could someone list the 3 stocks before? Oh, okay. Sweet Den did that. Thank you to Sweet Den. IBM. Ooh, I actually have some IBM. Now, I like IBM. I'm not happy what happened last week, but I'm okay with it because it opens up an interesting possibility. Take a look. The high of the year, the low of the year. Where was it a year ago? Where is it now? Look at this. Shoots up, pulls back. Shoots up, pulls back. Big, huge drop last week. I love a big, huge drop. But here's the thing. 30 days ago, we're here, 255. Jump up to 310. Big gap down. Now this was earnings. You know what happened with earnings? 4 words. You ready? 4 words. We missed our target. We missed our target. Market maker says, oh, you missed your target. Well, there you go. Now, I say this often. I don't say it every time I'm on, but I do say it often. You see the stock going up? There's a top right there. If you don't take your profits, okay, look, it went up. If you don't take your profits, you cannot be mad that the stock drops. It's not a profit until you take it. It looks good on paper, but it doesn't mean shit until you take the profit. Let me say it again. It's not a profit until you take it. Also, nobody ever went broke taking profits. I got a question. Casey, let me speak for most of us. Thank you. Okay, Casey, you're welcome. Esteban, why no long-term maturity dates? Now, Esteban, I'm going to tell you something. You're not going to be happy about it. Okay? You want long-term maturity dates. You're in the wrong place. I'm 62 years old. There's no guarantee I'm going to be here next week. There's no guarantee I'll be here next month. There's no guarantee I'll be here next year. Okay? I check every once in a while. And there are dozens upon dozens upon dozens of kids that I went to school with that just ain't here anymore. Younger than me that still aren't here. Okay? My friend Billy, who's the best man at my wedding, he's not here anymore. His younger brother's not here anymore. I do not pretend to be immortal. I have no intention whatsoever long term. My idea of long term is 30 days. 30 days. That's long term for me. Okay? If you're younger and you want cash, you don't want cash flow, you want appreciation and you want long term stuff, great, you're in the wrong place. I hate saying that to people, but I don't want you wasting your time. You think you're going to find something you can buy now and just hold on to for decades? You're in the wrong place. I'm looking for weekly cash flow. Long term for me is 30 days. Sorry. Invesco, you got to give me the ticker symbol. Vito, CRM. Didn't we look at CRM last week? Ooh, nice. Take a look at this. See, when I say it takes 2 to 3 seconds, 2 to 3, 2 to 3 seconds to take a look at everything I need. When I'm looking at a chart, a 1-year chart, I'm looking for 5 things. It takes 2 to 3 seconds. High, low, where was it? Where is it? Where is it going? That's it. The high is here, the low is here, and we're here. And it's bouncing off the bottom. 2 to 3 seconds, that's all I need. All right, fine. It's at 170. Well, the 170 is going for 525. 525 is more than 3% of 170. So yeah, I like it. So let's take a quick look. Now it makes me a little uncomfortable down and up, but it actually went down, up, down, up, down, up. Okay, but here, 1, 2, 3, right there. It's going up. 170, the 170 is going for 525. This could be number 5. We're also going to open up the phone for phone calls if anybody wants to have a conversation. Okay. Classes. 170. There we go. And here we go. You ready? One covered call, CRM. 24 July 26. That's 5 days away. This Friday, we're going to do something in a second. The 170. 465, 16,000. What's the rate of return? 465 on 16. Ooh. Shit, I sent it. I did the wrong thing right there. I meant to pull up the calculator. All right, 465 is the profit. And we're going to divide it by 16,535. That gives me a grand total of 2.8% for 1 week. If and only if you actually like the company. So you have to do some research. Do I like CRM? What have they done? What are they going to do? Is it something I feel like I can trust putting my money into? And that's a you question. I can't tell you what to buy and sell. Sorry. I could, but I'm not going to because that would get me into a lot of trouble. And sorry, that ain't going to happen. So, 2.81. I'm going to save this one. This is number 5 for the evening. So means we're going to do questions. There we go. Was it Salesforce? Okay. So let's clean up the computer, and then we're going to take questions. I'm actually going to open up the phone lines for anybody who wants to call in. Change this to covered calls. There we go. And what did I say it was? 2.8. Yeah, 2.8. Okay. Here it is, CRM. And there it is. Yeah, baby. All right. Oops. Wrong one. One covered call, CRM, Salesforce, if you like the company, 24 July 26, which is for this coming Friday, 5 days away, the 170 call option. Well, it's paying $465 per contract. $16,000 is the investment for a 2.8%. 2.8% for 5 days. If and only if you actually like the company. Never buy something. So I got 5 simple rules. Now you've heard the criteria. Okay? By night. Oh, you know what? Let's do this. Hold on. Hold on a second. Uh, 2.8. 2.8 CRM. All right, so what we're going to do now is we're going to go off the beaten track for a little bit because there's a couple of things I want to show you before we move on. Every week, every week we take a look at how many new companies are there. And for that, we go to FinViz. FinViz, right there. I go here often, it's already there. All right. Now, I want to look at the screener, and I want to look at one number. Where are you? Oh, righty. Yeah, okay. Okay, hold on. All right. You ready? This number right here. Here we go. You ready? I see this. I show you this number every single week because every single week this number changes. 11,497. So as of tomorrow, you have a choice of 11,497 different companies. That's a lot. How do you decide which ones you want to look at? Well, the only ones I look at, I have 2 criteria. 2, that's it. 2 criteria. Number 1, consistency of profitability, at least 2 decades. That's 20 years of consistent profits. And 2, weekly options. That's it. 2 decades, consistently profitable, and weekly options. That's it. There's no special sauce anywhere. Okay, second thing I wanted to show you. This is the second thing I want to show you. Okay, here's my. Let me get rid of that. Okay, here's my YouTube website, The10MinuteTrader. As you can see, 2,200 videos. So yes, I've been doing this for a while. My very first videos, you'll see. Wait a minute, I'm going to pull it up right now. Videos. The oldest videos. Here's the oldest videos right there. There's the little princess when she was 9 years old. Okay, here's when she was 11. We've been investing for quite a while. When I say my 9-year-old.
Gracie, and as being part of my internet lifestyle company, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading.
Okay, that's the princess. Actually, I was with her this afternoon. We were at my son's house. Oh,
There's over 20 days.
oh, whoa. Today's her birthday. So we were at my son's house. Okay, so it was my son and my 2 daughters. Okay, all right. July 4th, July 12th or July 13th, and then July 19th. So 3 of them, I got 4 kids, 3 of them are in July. So they had the party today, and it was JC's birthday today. There's me, a long time ago. My favorite part's coming up.
21 days in the month. What does that mean? That means every single day you can buy a different stock. Every single day there's a different company.
That's my favorite part. Yay! Now, the reason why you see me doing that kind of crazy stuff, I didn't have to wear glasses back then. Look, how long ago was this? Thinking 12 years ago. Like 13, 14 years ago. Anyway, the reason why I'm showing it to you. Number one, in 2008, my 9-year-old daughter, right? My 9-year-old daughter says, "Daddy, what are you doing? Can you teach me?" So most adults don't understand it, most adults don't get it, yet I'm supposed to come up with a trading strategy specifically for this little one, that little one right there, okay? So, Daddy, can you teach me? All right, so it had to be simple, it had to be safe, predictable, consistent, and no way for her to lose. So what I'm giving to you for free tonight, I'm not going to ask you to pay me anything. I'm not asking you to buy anything. I'm not even asking if I can pitch you. I'm not going to do that. I'm giving it to you for free. That's it. No strings attached. We're adults. We know how it works. You want to buy one of the books? Go to the website. Okay? Here, for the 9-year-old, simple, safe, predictable, consistent, no way for her to lose. 5 rules. The rules are simple. Rule number 1, for my 9-year-old, never buy anything that's not on your list. So for my daughter, it was dividend kings, dividend aristocrats, dividend champions, dividend contenders, and anything on Warren Buffett's list. That's 350 different companies. So we take it, hold on, back to here, right there, right there, right there. So out of those 350 companies, we put them into a calendar, July 2026. Each one of these little green dots you see is a company that I have no issue whatsoever in buying. But the reason to the calendar is because here we are today. So this week we got Caterpillar, Palmolive, PNC, Dell, Apache, Levi's, Lowe's, CVS, Costco, Signet, Procter & Gamble, and Pfizer, and ACI. Those are the companies that have dividends this week. Well, those are the only ones I want to look at. If I'm pulling up the calendar, 350 companies, no, hell no. I only want to look like 10 or 15. That's it. I don't want to look at Verizon because they paid their dividend 2 weeks ago. AT&T, 2 weeks ago. Advanced Auto Parts, 2 weeks ago. General Dynamics, 3 weeks ago. Why would I want to look at them if they paid their dividend 3 weeks ago? Now, next week, Plains All American, Texas TXN, Texas Instruments, AGNC, EPD, CAG. Is that Conagra? CAG? STZ is something gate. Constellation Energy and something else. Anyway, so what I'm looking for is an edge. Well, if stocks have a tendency to move up just before they pay their dividend, I want to know when they're paying their dividend so I can swoop on in just before then. Just because, see, I want to look at the calendar first, then I want to look at the chart. Well, the calendar tells me that the stock has a tendency to move up just before the dividend. When the dividend tells me whether or not are they consistently profitable. And then I look at the chart. Is it the right time to buy? If so, did I miss it? Is it coming or did it already leave? But I like to have all the odds and probabilities in my favor. Okay, that being said, let's take a look at some more questions. I'm going to pop the phone number up on the board. Anybody wants to call, they can. 727, what is it? 543 543 3, last 9418. 9418. Anybody want to call? Phone's free. Let's take a look at some questions. I have Mosaic. Say why? I love Mosaic. Craze 4. Are you registered and legally allowed to give investment advice? Okay, so Crazy 4. I'm not giving advice, dude. I'm making observations. That's it. It's an observation. I never, ever, ever give tips, and I never, ever, ever give investment advice. The only advice I give is don't stick your head out too far. It might go home in another car. I also say never put any money into anything, paper trade first. That's the only advice I give. Paper trade first. And never ever listen to anybody online. Do your own research. You guys are asking me to take a look at stocks. I take a look at stocks. I read you the numbers. It's not advice. It's not a tip. It is an observation. And there's a huge difference between the two. Daniel. Fruity. Okay, thank you there, Daniel. Observer! He does not, he only shows what he does. He constantly says that he cannot tell you what to do. You're absolutely, oh, look at this. Pittsburgh, Kansas. Come on down. You're the next contestant on. Hello.
Hello.
And how are you today?
I am fine. How are you, sir?
I am delightful. What's your name?
John Didier.
Oh, John, didn't I talk to you last week?
Yeah, sure. I'm a fan.
You're a fan. All right. What do you got for me today, John?
Hey, I just wanted to touch base with you on a few things on your strategy.
Okay, go ahead. Shoot.
To go into a little history, though, there was a man named Edward Thorpe who basically mathematically proved card counting in blackjack
Okay.
in the 60s. Then he was a PhD in mathematics, and he realized that in the early 60s, the market makers were pricing options basically by the seat of their pants. And he realized that there was some mathematics behind it, and he made millions playing options because they were mispriced at the time.
Okay.
That was where the Black School's pricing model came from.
Okay.
And they pulled in a bunch of blackjack players and poker players who knew the math that actually worked on the Black School's formula.
Okay.
And I'd like to apply some of these bankroll management principles to your strategy here.
Okay.
So I'm wondering, of your 390 stocks, you know, your Dividend Kings and Aristocats and all that, you have about 390 stocks you're watching.
Okay.
And on an average week, how many are hitting that 30-day low and looking promising, and the earnings are coming out that meet your criteria? How many positions do you think meet your criteria on an average week?
On an average week, I'd say about 5 to 10. I mean, I don't look at every single one that fits. I look at them until I run out of money. Once I run out of money, it's like, okay, I can't do anymore, so what's the point of looking?
Okay. So
I mean, wait a minute. Does that sound logical?
Not really.
Well, wait a second. Wait a minute, John. John, if I run out of money after the third one,
Yes.
why would I look at 5, 6, 7, and 8?
Well, I think I'd look at them all and then pick the top 3.
All right, well, see, here's the thing. I agree with you. That makes sense if money is a huge motivating factor. That makes sense?
Yes.
Okay, now wait a second. When money is no longer a motivating factor, don't I want to get in, get out, make my money, and have a nice day?
Okay, so you're valuing your time. You have a bigger value on time.
Absolutely. I would prefer to sit and watch the grass grow rather than sit in front of the computer.
All right. That's okay. That makes sense.
Okay, so hold on a second. So everybody, John's talking about the Black-Scholes pricing methodology for standardized options. This is the formula to find out how to price options. So what's in there?
Correct.
You get time value. That means the time from from today until the expiration date. That's the time value. You have what's called intrinsic value. That is the valuation of the stock as compared to the strike price. Well, the strike price is in there also. You have interest rates. They're in there also. What else is in there? Do you remember what else is in there, John? You have volatility. You have strike price. You have stock price. You have option expiration. You have time value, interest rate. Something else is in there too. But there's a lot of stuff in it that actually makes up the value of the stock option. Like, so continue.
Okay. My next question. Okay, you find 3 or 4 positions per week
Okay.
that you spread your money across.
Okay.
Do you ever say this one's got a 99% probability instead of my normal, however many contracts you normally write? You say I'm going to double down on this one and write twice as many contracts.
Well, it's an interesting theory. I like to keep all my trades even. So if I have 100 grand, I'll do 5 trades, 20,000, 20,000, 20,000, 20,000.
Okay.
Okay, I like to jump in, jump out, grab just 1% and then move on with my day.
Right.
Now, I could take a look at everything that's coming up. It'll take me a lot more time, but then I'm trading my time for money.
Right.
So it's always going to be a personal choice, a personal journey. Your journey may be different than mine. I don't know. Are you retired yet?
Yes.
You are. Okay. Now, you don't. Wait a minute. You don't have to tell me the amount. Wait a second. You don't have to tell me the amount. But does 1% of your portfolio on a weekly basis satisfy all your bills?
Oh, absolutely.
Okay.
Yeah.
Well, does it give you extra to add to the portfolio also, so your portfolio grows and you get to pay all your bills?
Yeah, I wouldn't have to use all my portfolio for that.
Well, that's awesome.
Yeah.
Okay, but
Yeah.
not everybody's in that situation.
Correct.
So, yeah, so the 1% I make off of,
I had to work hard to get in that situation.
hey, brother, I've been working since 1974. My first job was 1974. I retired 3 years ago. Okay?
Same boat.
Okay, so you know what I'm talking about. So the amount of money you have, the amount of money I have, satisfies all my bills plus a little bit extra. Now, I could go back to work and make my account bigger, but why?
Absolutely. I can't answer that question. I don't know myself.
Yeah, but I could. I mean, it's like I was remembering, thinking to myself, oh, wow, why couldn't I get paid when I was younger what I'm getting paid nowadays? Because when I stopped working, I was getting paid like $125 an hour. Okay, fine. That's what I was making. Put 40 hours a week in, so it's a nice little paycheck at the end of the week.
I still have the phone ringing years later. People are still calling me.
I get that odd call once in a while.
Yeah. But so anyways, you spread you have a unit position, and so you bet even units on all the positions.
No, that's not what I said. I said dollar wise they're about even. Unit wise they're not, because I got one stock that's like $300 and I have another stock that's I think it's $2.
Okay. So the $2 stock, naturally you would write more contracts to come up to that even dollar amount.
Correct.
Okay, yeah. Okay. But dollar wise, you don't weight it dollar wise at all on the positions.
No, it is weighed dollar wise. It's 20 grand, 20 grand, 20 grand, 20 grand.
Okay. Gotcha.
Okay, it doesn't always work that way, because when you jump, say at the beginning of the year, it's great, 20 grand, 20 grand, 20 grand, great. By the time 4 or 5 months come by, one position you're holding on to longer, so maybe it's worth 25, and the next one's down to 18. But I would like it to be even.
Right.
Doesn't always work, but that's the intention. That makes sense?
Kind of hard to balance.
It's extremely hard to balance because when you get a $300 stock and then you get a $65 stock, well, how do you balance those out?
Yeah. Yeah. Okay. I understand. Okay, that kind of makes my calculations here, what this is going to require, a little bit easier.
Well, I'm glad it's easier for you there, John. But I'd like to know how you've been doing because I think I talked to you a week or two ago.
Yes.
Okay. So another couple of months, I'd like to hear back from you and see how it's progressing. How are you able to get the 1% every single week?
Well, I'm gonna go on paper first.
Oh, that's a great idea. Always paper trade first. And there'll be a little nagging voice at the back of your head. I'm not talking about your wife or your ex-wife. I'm just saying a nagging voice at the back of your head saying, real money, real money, real money. Because as you're
Happily single.
Alrighty. So as you progress with your paper trading and you get better and better and better, there will be a voice in the back of your head saying, you're ready. You're ready, you're ready. But never, ever, ever do anything until you're successful at paper trading first.
Absolutely. I understand.
Alrighty?
Just, you're talking to a poker player. And you might think you can beat the game.
Yeah.
But until you actually sit down at the table and consistently beat it, you can't say that I know I can beat the game.
Oh, I can't. I used to sit down with my dad and my uncle, and it's like, oh no. They'd clean me out. And I was like, no, thank you, because back in the 50s, because my dad and my uncle used to play in the 50s and the 60s.
Yes.
They wiped me out every single time. So I just don't play anymore.
Okay. Good. The smartest thing you can do is if I sit down at the poker table.
Yeah.
Your smartest move is to get up and leave.
Yeah. I wouldn't even see the only game I ever played at the when I went to Vegas, I'd play blackjack because it's the only game you actually have a chance of winning.
Yeah, I started with blackjack in the 80s. I got tired of getting kicked out of casinos and banned. That's why I went to poker.
Well, you gotta do it sporadically. You go in, you make a couple of grand, you leave. You come back, make a couple of grand, and then you leave. It's when you make the big digits they have a tendency to keep an eye on you.
They keep a very sharp eye on you, and then they tell you you're not welcome anymore. And I got tired of that, so I went to poker because you can win as much as you want at poker. They will not throw you out.
Yeah. Well, you have anything else there, John?
No, I was just interested in, if you did different size positions or how many positions you're hitting per week on this, because I haven't sat down and analyzed exactly how many are meeting your criteria every week.
Oh, wait a second. Let me show you. Hold on. All right, John, do you see the calendar?
Yes.
Okay. So, the beginning of the month, okay, we had Comcast, Cardinal Health, John Deere, Annaly Bank, U.S. Bank, Mandalese, AGNC, Disney, NTR, American Express, General Dynamics, Bristol Myers Squibb, and Campbell's. Now,
Right.
Out of those, what is that, 12?
Yes.
How many of those do you like?
Well, how many have the proper, how many have the proper chart?
Wait. Don't worry about the chart. How many of those companies have you heard of that you're okay with?
Well, since your
Wait a minute.
screening is Aristocrat, Kings.
Yes, but what I'm trying to say, John, you ever hear of Campbell's? Campbell Soup?
Yes, sir. I've been watching Campbell's. I think that's a good turnaround, and
It
there's some
is.
money to be made in Campbell's.
Yeah, you're right. General Dynamics, you ever hear of them?
Yes, sir.
Bristol Myers Squibb,
Yes, sir.
American Express,
Yes, sir.
Comcast.
Yes, sir. I don't know if I like Comcast.
I didn't say if you liked it. I said, have you heard of them?
Yes.
Okay. Cardinal Health,
Yes.
John Deere,
Of course.
Annalee Bank.
No, I'm not familiar with that one.
Okay, that's fine. U.S. Bank.
Yes.
Now, Disney, you heard of that one. I'm going to have to check on those. Hold on, let me check on these because I've never heard of them before. Let's see who they are. Glasses. Okay, DBRG. What is that? Digital Bridge Group. You ever hear of them?
No, sir.
Me either. They're only paying a 1 penny dividend. No thanks.
Exactly.
NTR, which is Nutrien. You ever hear of Nutrien?
No.
Okay. That's a 55-cent dividend. PCG, that's Pacific Oil and Gas.
Yes.
Okay. So out of everything on that one day, you've never heard of that one and you haven't heard of that one.
Right.
Okay. But all the other ones you heard of.
Yes.
Okay. Well, household name brands, fine. So we take a look at the chart. Which direction is it going? The high, the low? Where is the flow? Easy, right?
Correct.
Okay, so if everything looks good and the numbers look good and you've heard of it, what's the issue?
No, I don't have an issue with that. I like the initial screen, but I'm saying how many have a chart that look good on a typical week?
There isn't. There isn't a typical number. Because every week it's different. They go up, they go down, they go up, they go down. But I'll look at 20 the first week, about 22 the second week. The third week, there was what? 5. That's it. But that's just this list. I got like 7 lists. So there's only 5.
Right.
And then, is it this week? So this week, we got Caterpillar, Colgate-Palmolive, PNC, Dell, Apache, Levi's, Lowe's, CVS, Pfizer, Procter & Gamble, Signet, Costco, GEHC, I don't know who they are, and I don't know who ACI is. But out of all of those, I have no idea who 2 of them are. But those are for this week. So there's always something new to look at. So it's always the same thing. Where's the high? Where's the low? Where is the flow going? Is it a good quality company or is it not? Same questions every week. It's just a different stock list every week. And with a different stock list, well, it's a different choice. And then we don't know what the numbers look like until we look at them. But this week, I'll probably only pick up maybe 2 or 3 companies. That's it.
Okay. So do you think it would be reasonable to say that on average, I'm going to find 3 positions a week?
Basically, yeah.
Some weeks I might find 5. Some weeks I might find 1.
Yep.
But on average, I find 3.
Yep. On
Would that
average,
be a reasonable number? Or
that is a reasonable number.
Okay.
Now, I do have to say, once in 30 years, I've been trading for over 30 years, but once in 30 years, everything got called out and I was 100% cash on Monday. Only once. For the most part, it's 2, 3, 4, 5 positions. But once in 30 years, everything jumped out and it's like, oh, what am I going to do? Okay.
Go spend some money.
That's right. I get that burden of spending more money.
Okay. Thank you very much. And I really appreciate the work that you do.
Well, I'm just tired of people, the little guy getting screwed over. So I'm just trying to help out as best I can. There's an old saying, John, you help out enough people and you'll get everything you need.
That sounds like a nice philosophy to have.
I think that was Zig Ziglar said that.
Okay.
Yeah, you help out enough people get what they want, you will get everything you need. And I'm okay with that. All right.
All right.
Thanks, John.
Thank you, sir.
Have a good day.
Goodbye.
Bye. All right, so what else do we have? It's past 10, so we're going to call it a night. Let me see if I have any questions that haven't been addressed yet. Question about FXAIX. We'll have to take a look at that one tomorrow. Rod, it's a no for this strategy. Yeah, JEPQs, basically. Yeah, it's the same thing. Yeah, I don't do the Qs. You take a look at the Qs, they're not consistently profitable. So for me, hell no. Hell no. What else do we got? Uh-oh. Why not? Why not? Okay, Kaz, I'm not quite sure what it is you don't understand about the fact. It's not my opinion. It is a fact that the Qs, QQQ, anything, is not consistently profitable. That means they make more money this year than they did last year. They made more money last year than they did the year before. Consistency of profitability, Kaz. That means money, more money, more money, more money, more money, more money, year after year after year. The Qs just don't do it. The Qs, the profits go up, the profits go down. Profits go up, profits go down. It's not consistently profitable. It's not that difficult a concept to understand. But to answer your question, why not? It's not consistently profitable. That's it. Okay, user 329160, Tractor Supply. We'll take a look at it tomorrow. I start at 8 and end at 10. Sticks, BTI. We'll take a look at that one next time. Observer, explain paper trade. What does that mean? Observer, what does paper trade mean? 4 greenhouses, 1 red hotel, round and round, round you go. Stay away from, go to jail, but you collect $200 every time you go by. That sound familiar? That's monopoly. It teaches you how to buy and sell real estate, how to mortgage out real estate, how to collect rents on real estate, how to avoid what's going on at the jail, the community chest, what's happening around in the community. It's basically preparing you for life in real estate. Monopoly, 4 greenhouses, 1 red hotel. Paper trading is the same thing. It looks the same as a regular account, but it's paper money. They give you a certain amount of money to play with, and that's what you do. You play with it. Anthony, how you doing? Nice to see you there, Anthony. Okay, it's paper trade. It's not real money, but it's a real experience. See, if you like BTI, well, great. You can go in and you can buy a couple hundred shares of BTI using paper money, like monopoly money. If it works, great. It's the concepts and the process of what you're trying to do when you're paper trading. It's just practicing. 9 Legi octopus. Okay. Observer, summary, blah, 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 blah. Righty. Crazy. All right. In the kitchen with Tommy. My year-to-date return. Well, at this moment, it's right around 33. Okay. We're into week, wait a second. 28, 29, 30, 31. So I'm right on the money. Okay. My year-to-date profit and loss is at 33%. I checked it last week. But we're into week 31, which means I'm a little bit above my Q. The Qs are probably the safest for your strategy. Option harvest. I'm not quite sure what you mean by that. So I get too many people poking at the Qs, so here we go. As much as I don't like the Qs, Qs are the safest, you say, huh? All right. I don't know how I got sucked into this crap. I don't do the Qs because they're not consistently profitable. But you want to challenge me, so let's do this. Let's do all the Qs. We're going to go all the way back to 2006. Because 2006, okay? So 2006 to 2026 is 20 years. Remember I said 2 decades? Let's go all the way back 2 decades. All right, here we go, right there. Okay, very first dividend 20 years ago. You ready? Let's do this. Okay, 2.9, 2.6, that's a 10% drop. 2.3, that's another 10% drop. 54, that is a 100% increase. Okay, so let's do it this way. Make it a little easier. You ready? Okay. Lower, lower, higher. Lower, higher, lower, higher, lower, higher, lower. That's only looking at 2 years. Okay, hold up, hold up. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Okay, we left off at September 2008. All right, September 2008. Okay. Higher, higher, lower, lower, higher, lower, higher, higher. Wait a minute. Higher, lower, lower, higher. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. We left off at June 2011. Okay. Higher, lower, higher, lower, higher, 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 lower, higher, 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 lower. 4 times. 1, 2, 3, 4. We left off at March 2014. Lower, higher, lower, higher, lower, higher, 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 lower, lower, higher, higher, lower. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. We left off at 2017, March. Lower, higher, lower, higher, lower, higher, lower, higher, lower, higher, lower, higher, lower, higher. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. Okay, we left off at June 2020. Hold up. June 2020. Right there. Okay. Higher, higher, lower. Higher, 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 lower. Higher, lower, higher, lower. Higher, higher. 1, 2, 3, 4. 1, 2, 3, 4. We left off at September 2023. Higher, higher, lower. Higher, higher, lower. Higher, lower, lower. Higher, higher, lower, higher. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. That's it. Okay. So, in the last 20 years, there are 80. Okay, hold on. $20 years equals 80 dividends. So 5, 10, 15, 20, 25, 30, 35, 36. Let's get the calculator out to see what kind of rate of return that is, or what percentage. Okay, 36 divide 80, grand total of okay, so why don't I like the Qs? I don't like the Qs because they go down 45% of the time. They go up 55% and they go down 45%. What the hell would I want to invest in something that goes down half the time? No, I don't like the Qs that are not consistently profitable. I have no idea how many times I have to say that. But it actually gets worse. It really does. Watch this. All right, get rid of this. We can go to the summary. Okay, let's get rid of this. That's much easier. All right, so we're going to go to the summary. The yield. Whoops. Okay, so here is the yield for the Qs. Now, you know what the yield is, right? The yield, you take all the profits, all the dividends, you divide it by the stock price, and that is your yield. Well, the yield for the Qs, 0.41% for the year. That's not even 0.5% for the year. Inflation's over 3%, and you're putting your money into the Qs, and the Qs are making you 0.41. Explain to me why you think that's good. Seriously. If the Qs have a yield of 41%, 0.41%, 0.4, not even 0.5%, and they go down 45% of the time. It's a numbers game. Okay? I love numbers, I really do, because numbers don't lie. The Qs go down 45% of the time, and they have a yield of 0.41. I'm going to end it at that because that's just freaking ridiculous. Well, the Qs are the most profitable. No, they're not. They are okay, never mind. That being said, we need some mood music, and we're going to be done for the day.
Here's what comes off a bowl of strawberries when you drop this to...
I just like that. I want to see the music. I don't want to see the freaking commercial. I don't. You guys have a great night.
Fixing the world while the rest of us sleep. Your heart set on giving, no matter the strain. Building your legacy through love and brain. Julie knows that fire in your soul, the kind that lifts the broken whole. James, you reach the skies, no one dares. In your hands, the future's caught unawares. That's to know what the hell we think, and you laugh as the yacht keeps the daylight blinking. Every day's a quest, not some disguise. With dreams in the storm, the dream never dies. Retired, you say, with a wink and a grin. But the podcast is rolling, pulling us in. Your compass is love, with your kids as your guide. Shining seas wide, with vision and pride. Julie's here, who adores your spark. The dreamer who lights up the dark. James, you reach the skies, no one dares. In your hands, the future's caught unawares. That's to know what the hell we think, and you laugh as
It takes 90 seconds for this NASA-engineered AC cool down your room. It's smaller than a toaster, cools any room in 90 seconds, and uses just a fraction of the energy of a regular AC. This incredible invention was built by two engineers, Thomas Berger and Leo Garcia, who used to work on thermal control systems for NASA space missions. They were tired of seeing people struggle every summer with broken ACs, $300 power bills, and unbearable indoor heat. And when a power outage during a heat wave left their families sweltering with temperatures soaring past 90 degrees, they decided to take matters into their own hands and create a groundbreaking portable AC capable of cooling down any room in a matter of minutes without the big costs. The two engineers, Thomas Berger and Leo Garcia, knew that traditional air conditioners were inefficient and expensive to use. So they reverse-engineered how traditional ACs waste energy, and then applied the same thermal control principles they once used to regulate temperatures in satellites and space shuttles to build a compact, ultra-efficient cooling device for everyday people. The result? This ingenious invention that's capable of cooling down any room instantly without the big costs. And it's now shaking up the $5 billion AC industry and helping families all over the country, instead of relying on Freon, bulky compressors, or...
All right. Let's call it a day. What do you say? We're calling it a day. Done, done, done. What am I doing? Shazam is not picking out this song so that I can find a copy to play. Actually, it's called James and the Storm.